Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Wednesday, January the 29th, 2025. I'm just going to do a quick overview of a couple of things happening today and also the overnight price action. I will probably, guys, release a preview a little bit later on this morning of the FOMC decision, the Fed decision, because that's kind of like a separate thing. So we'll just do this one fairly quickly here. Just overnight, what I want to look at is just a little bit to see what happened with the equities and some of the winners and losers in the sort of continuing fallout and ongoing kind of action following the deep seek thing. And what we can see is that the equities are having a little bit of a bounce this morning. You see Nasdaq on the futures up about 40 basis points. You can see here on a daily chart. You see that, Nasdaq obviously sold off to the lows. But what's interesting here is that it's made a pretty good recovery. It's pushing higher. And we can see here, I just want to put this on a 1 hour chart, which for me, as I was saying yesterday, it's always important just to see the reaction rather than the price action itself. I'm kind of curious to see how the market reacted. And what I like to do is to put this sort of Fibonacci retracement here. So we see the sell-off on the 1 hour chart. And for me, this level around about 21, let's call it 21,500-ish, which is the fib retracement. So actually we had a bit of resistance there, but we now seem to be settling above that. So that's a relatively positive sign. And we have seen some positivity in the sort of a tech space this morning. And that could possibly be due to over in Europe, there was some pretty good news from one of the big companies over there, ASML, the chip maker based in the Netherlands, which had a very, very good earnings report for Q4 and also pretty good forward guidance, and basically saying that AI was definitely still the forward sort of engine of growth, and they had huge order books, et cetera, et cetera. So the point is that ASML with very, very strong not only earnings, but also outlook. And that's given a shot in the arm of confidence to the semiconductor sector and tech in general this morning. We'll see if it continues, but that's definitely an interesting thing to look at. And then ES as well, same kind of thing. I've got the fib reversal here, and you can see again that it actually it too on the ES on the S&P 500 futures here is above the fib reversal. So this is it's looking relatively positive. Of course, we have the Fed and we have tariff, the risk of sort of headlines on tariffs from Trump. What I will be looking up today is just on the cash index. We are trying to fill this gap on the SPX here. It looks as though it wants to fill the gap. So that could be a pretty critical level up to, let's say, on the cash on a 6,090. I think if we get above there, that would start to look quite, I don't want to say bullish, but it would look like a recovery. And I think the market, it seems to be taking away this idea of there are winners and losers. And from what, the continuing commentary over the last sort of 24, 48 hours is that, yeah, this represents potentially a problem for NVIDIA, but for a lot of other major companies, they might have to do less capital expenditure, less CapEx, and it could also encourage more innovation with the open source code. And essentially saying that for the broader economy, for the broader breadth of companies, cheaper access to AI is possibly a positive, and it could lead to sort of increased productivity. Now, there could be some losers. Maybe NVIDIA, as I said, might have a bit more competition. So interesting, I came across this little chart here of some of the winners and losers. And you can have a look at this here. So this is interesting. Look at the winners and losers. And you can see here, looking at sort of the 1 week, what's happened. You see the big losers here are some of those sort of semi makers. So you've got here like Micron down 19, Constellation, Broadcom 13. NVIDIA, of course, had a big hit, although it did recover a little bit yesterday. So now just down about 8.4%. Taiwan Semiconductors down 7%, et cetera, et cetera. But it's interesting. So you see here, for example, ASML, that's the one I was talking about in Holland, which is a huge kind of foundry of, they make the chips on a global scale. You can see here they were down 5.2, but actually having a pretty good morning and actually up about 8%. Day over day because of the earnings and the outlook. So the point is, this can actually change pretty quickly. But again, interesting just to look at some of the big winners here. You've got some of the other, so you've got Apple up 7%, Microsoft doing pretty well, Amazon, Meta up doing pretty well, Palantir, Salesforce. So we're seeing some of these companies which had sort of feared or sort of forecast huge capital expenditures, maybe having to do less so. So that's just going to be interesting to look at sort of this winners and losers. The other big losers, of course, was more like sort of the power providers and some of the data centers and the infrastructures. And if you look at some of the big losers here, you've got like Vertiv and Vistra, who are kind of the darlings of, to generate electricity to be used for the sort of AI data centers. So actually not doing particularly well here at all. So that's kind of interesting. And another chart, I just want to show you a couple of things here, which I've been keeping my eye on. I'll just bring up the chart here, is there's the ETF, which has the ticker DTCR. So let's put it in here, DTCR. So it's the Global X Data Center and Digital Infrastructure. And this, this is on the 1 hour chart, but you see here, pretty brutal sell-off. Actually, I wonder how many percent that was. So down at the bottom, about 8%. So pretty brutal sell-off here. We're seeing in the last couple of hours a little bit of a green candle. But I think it's going to be hard for these. I mean, it's an interesting one because you could argue that they are permanently sort of like damaged goods a little bit, and so the stock shouldn't be trading quite as high because the ongoing potential demand for these sort of huge energy usages may be a little bit diminished if the infrastructure required is not as sort of energy intensive. On the other hand, you could say that the medium term picture is that if AI is more broadly adopted because it's cheaper, then overall on a sort of a net basis, there's going to be no shortage of demand for sort of energy. So that's an interesting one to be looking out for. The other one which I've been looking out for is just is Cameco, because one of the let me just put it up here. Actually, I think it's CCJ. Whoops. The uranium producers and the thought here. I'm just bringing up Cameco here to have a look at that chart. The huge Canadian, one of the world's major producers of uranium. And the idea being that because AI infrastructure and data centers would require so much energy, there would be, therefore, the only way really to satisfy that energy would be to have more nuclear power, which of course requires uranium. So these uranium stocks and uranium UTFs like URA, I think I mentioned that yesterday, had been doing pretty well on that sort of medium term forecast for great demand. But you can see here just on the news that maybe the demand won't be so much for energy. You can see here a company like Cameco, this is a 1 hour chart, having a pretty dramatic sell-off. Actually, how many percent is that? Approximately, about 17, 18%, and kind of still struggling a little bit. So again, it's going to be interesting for these, data centers, energy providers, the utilities. We saw XLU yesterday under quite a lot of pressure. So we look there, XLU, which is, the utility ETF, which of course a lot of those utilities, a lot of those electricity providers are in the utility ETF here. So you see there also the XLU having a pretty nasty sell-off, tried to rally, still trading pretty heavily there. So that's kind of the winners and losers. And we'll see. And we're starting to get some comments out of OpenAI and a few others in that space, basically saying they think that maybe the Chinese, maybe the DeepSeek actually had sort of essentially stolen some of their intellectual property. There had been some perhaps unauthorized use of their code. We shall see. So it doesn't really matter. I think the main takeaway seems to be from the market participants and commentators is that the playing field has leveled slightly, which is not to say that there's not still going to be huge and ongoing demand for AI. So let's keep an eye on that. I'll just have a quick sip of tea here. Earl Grey this morning, very good. A touch of bergamot. Okay, so just overnight, a couple of things to look at. We had CPI data from Australia, which is released quarterly, is the most important one. So kind of interesting to see the Aussie dollar sold off just because the CPI. You see here the Aussie dollar, selling off pretty strongly. Actually, we'll put that on a daily chart. So under pressure and starting to break down levels. So you see the Aussie dollar under quite a lot of pressure. So under pressure from a relatively weak sort of Chinese demand for commodities. Secondly, a broadly sort of a risk-off global trade risk-off situation, especially with Trump and the risk of tariffs and tweets on tariffs. So the Aussie dollar has been under pressure for quite a few months, staged a bit of a rally, but again, finding it hard to go back into this big trading box, this big trading zone. And that's actually the same kind of thing which we've been seeing in euro as well, just and the US dollar, that these huge trading boxes. We see the Aussie dollar try to get in there. there, rejected at the 50-day EMA, which is this kind of purple line here, and now going to do a retest of the bottom here. And if we look at the CPI numbers, which I think I pulled up here, just having a look here. You can see overnight this CPI year over year was unchanged, but really, if you look at the quarter over quarter number, that was down a tenth. And you look at the trim mean, this is one which the Reserve Bank of Australia, the RBA, likes to look at the trim mean. You can see that was expected at 0.6, came in at 0.5, and that's against a prior of 0.8. So quite a significant reduction there. You also see year over year the trim mean and the weighted median also more of a core measure down compared to estimates, and also quite significantly down. So if we actually then look at let me just put this up here, what's expected for the RBA's first meeting. Remember, it's the summer in Australia, so the RBA is not meeting for a while. But if we look at the RBA here, you can see that their first meeting of the year is not until the 18th of February. But the possibility of a cut has actually been increased. And you see here that actually 23 basis points are now priced in for the RBA. So that sort of slightly dovish CPI has put downward pressure on the Aussie dollar. There's also, as I say, pressure from an underperforming Chinese economy and potential for trade tariffs. And now we have a CPI seeming to come down a little bit, a tiny bit of deflation or deflationary tendencies. That's putting the Aussie dollar under pressure. And we now see that's being reflected here in the pricing for the RBA. So just looking out further ahead, if we go all the way out to the year, about 3.5 cuts projected. And keep in mind, though, that the effective rate in Australia is still 4.35, much higher than, well, I wouldn't say much higher, but basically the RBA hasn't yet cut. So it's been one of the last holdouts and one of the more hawkish of the developed economies, central banks. So interesting to keep a lookout on that. Other thing to look out for today, of course, guys, is the Bank of Canada Cup happening in about, 2.5 hours here. So if we just look at Canadian pricing, pretty much fully priced in, about 23 basis points priced in for the cut. They had at this point that this will make about 200 basis points of cuts. So on the opposite side to Australia, the BOC has actually cut fairly aggressively, much more than the Fed and the ECB and obviously Australia. So the idea, they've also done some 50 basis points cuts, and it's kind of an interesting one because there had been some talk about maybe doing 50 basis points, but the reality is, I think today what we're going to get is like a hawkish cut. Why hawkish? Excuse me again. I think there's a few reasons for hawkish cut. Basically, we've had the last two employment reports have been actually very, very robust, very, very strong. So indicating that the labor market in Canada is still pretty good. Also, the number of hours worked actually increased in the last labor report. So maybe productivity is going up. We also had in quarter four, the retail sales, and consumer spending actually was pretty strong. And so the economy seems to have stabilized in a relatively well. There's still some areas of weakness, but certainly the employment situation and consumer spending is relatively, let's just call it, robust. And the other thing as well, of course, is that the US dollar or the Canadian dollar has weakened significantly against all currencies, not only the US dollar. So we're getting to a point where the Canadian dollar actually is getting historically quite weak. And you have to ask yourself whether the BOC actually wants that to further weaken. So I believe today we'll just get as I say, a 25 basis points cut. Again, Macklin, I don't think he's going to say anything particularly controversial. We have Trump threatening on February the 1st, which is this Saturday, to impose unilateral tariffs on Canada. So that's why I think we'll get a cut, but maybe not 50 basis points. But on the other hand, you could say, well, why do they need to cut? And you could say, well, on that side of the equation, so that was the hawkish part. On the cutting side of the equation, we've had inflation coming in a little bit lower. The wage growth actually is slowing. So yes, employment is okay, but wage growth is slowing. And of course, as I just mentioned, there's a lot of tension and uncertainty in the trade space and tariffs, and also political uncertainty with Trump being aggressive. And of course, Trudeau, the Prime Minister, is set to to step down officially, and in de facto has already stepped down because the Liberal Party leadership is happening in about a month or so, and probably in the spring, in 2 or 3, 4 months, we'll get general elections in Canada. So there's quite a lot of political uncertainty. There's a leadership vacuum. We have Trump, we have tariffs. So I think that the BOC today will probably just want to sort of tread very gently and not try and rock the markets. And if we just have a quick look, we could see yesterday, I think it was like about 1 p.m. or so, I was listening to it, Trump tweeted again and sort of reiterated the fact that he is planning to put tariffs on Canada on February the 1st. Now, whether that's just bluster, big talk, is it going to be 25% unilateral? Is it going to be the threat of that? Is it going to be, Scott Bessent, the new Treasury Secretary, was saying 2.5% universally? Who knows? 2.5%, 10%, 15%, 25%, nothing at all. We don't know. What I can say is that you see here a bit of a green candle on the daily. This is USD Canada spot. So it's been trading in a range, just really trying to wait and see what's happening. But you can see here the 50-day moving average, EMA, US dollar, very, very strong above that. My belief is that this is going to be fairly binary. If the market is underwhelmed, let's say no tariffs or only 1 or 2%, I do believe there could be a pretty significant reversal of maybe 1% or even 2% on the USD CAD. On the other hand, if we get something more on the aggressive side, 12, 15, 25% for sure, US dollar, I think is obviously going to test these highs, but I think could go up to this sort of historical resistance up to even 146. We shall see. Talking about that, just want to say I was reading a bit of a technical article yesterday, which I won't go into, but essentially looking at sort of interest rate differentials and sort of weighted trade balances and a bunch of other metrics. An article I saw, it's saying this. The point of this article is saying that about 10 to 15% tariffs actually are in the price already, which is kind of interesting. And if you go back and look at USD CAD, we can see that, indeed, the US dollar basically since, pick your poison, kind of January 2024, or at least definitely, let's say, the last 3 or 4 months since October, US dollar has been strong against CAD. And, according to this sort of analysis, they're saying that, partly this is, the pricing in of, some form of tariffs. So I think really to move the Canadian dollar one way or another against the US dollar, I think we're going to have to see some pretty significant tariffs, probably at least 10% or so. Anything I think less than 10%, it might get a little bit of a pop, but not a significant movement. And I think definitely anything, under 5% or 2% or some kind of vacillation or just mere bluster from Trump. And I honestly do believe that USD CAD can come back 1% or 2, maybe even back to 142, 141, something like that. So that's something to be looking out for. Just finally, guys, just want to look at, again, US dollar strength this morning. So we're seeing the euro come off. We'll talk a bit more later on about the ECB. But again, similar kind of situation here. We see this huge trading zone, kind of fair value, well, not I would say fair value, but trade zone in the Euro USD, which it kind of broke out of, tested new lows. A lot of people calling about parity. You see here that was a retest of the low there, about 102 down here. It's bounced up, but finding it difficult to trade back inside the box. A bit of resistance again at the 50-day exponential moving average here. On the way down a little bit, it looks like today. So I think there's still, the reality is that the European economy is doing okay, but it doesn't at all seem to be as strong as the US economy. There's still the threat of tariffs. And there's no reason really to think that, the euro in any shape or form should be particularly strong at this point. And again, on a fair value basis, a lot of people are saying that really the fair value of the euro is something more like 96 or 98. So it's not unreasonable to think that the euro, medium term could test down here at 102, and then even, slightly longer term, get down to parity at 101. We shall see. Of course, we're going to have to see what Trump does this Saturday. Finally, guys, just looking at oil, interesting, we have the OPEC Plus meeting next week. Oil here, you see, sort of having a little bit of a down day. I thought it could bounce a little bit. It did bounce a little bit. But if we let's push that back to, let's say, an hourly chart. Kind of interesting technically here. What we're getting, we had this sort of pretty clean downward channel. So this is an hourly chart on the CL1 contract. And what you can see is a big fib level, which is, I think, probably going to be support around about 72.30 on the CL1. You see on the hourly chart here, though, sort of a downtrending channel. Tried to break out, couldn't, then again tried to break out, rejected, trying again, literally as we speak. This is going to be interesting because the oil, I think, is in a very it's in a state of equilibrium. Trump keeps on telling us that he's called the Crown Prince in Saudi Arabia. He wants OPEC Plus to increase their output to get the prices down. I don't know if they particularly want to do that. Excuse me. Um, Having said that, the OPEC Plus, which is meeting next week, they have delayed for three times their intended output production increase, and they keep on putting it off and putting it off and putting it off. Of course, the market was weak, but the point is that next week they're scheduled. I mean, the next scheduled increase in output is for April. So, as a way of kind of placating Trump, keeping Trump happy, and sort of politically making sure that he doesn't throw a tantrum, and also losing face and not seeming to cave in to Trump, what could be a compromise is that OPEC Plus next week say, hey, all along we had planned to increase output a little bit in April, and they may formally ratify that next week and increase production by a small amount. 50,000 barrels a day, 100,000 barrels a day. So on paper, and the headlines can be OPEC Plus increased output. They can claim that they weren't particularly manipulated by Trump and they were just following what they had already planned to do. Trump, of course, will probably immediately tweet and say, oh, my pressure forced OPEC Plus to increase production. So that could be a win-win situation for everyone. So I'm not going to be surprised at all if next week we do get a very small increase in output in the production levels, but probably just a small one, which probably OPEC Plus members are hoping are not going to upset the market too much. The other issue as well is that we did have about 400,000 barrels offline because of production interruptions in Libya, one of the major Libyan oil fields. I was just reading, it seems as though the shipments are starting to go again. They're starting to flow again. There's like the civil war there. So maybe that put a little bit of downward pressure on oil. I still think oil is interesting. If it goes into this downward channel, maybe let's say it goes down here somewhere and we get anywhere around 72, 72.50. I think just from a risk reward technical trading, that is worth a shot because the reality is that it looks as though the oil producers in the US are not in any particular hurry to increase production and lower the prices too much. OPEC Plus is showing quite a lot of discipline. There is also the possibility of some, tightening of sanctions by the US on Iran, Venezuela, and the Russians. We shall see. So there are some reasons to think that oil demand is reasonably, strong, robust, not collapsing, not exploding. And from a production supply point of view, let me just say it's quite disciplined. What we should keep on an outlook on today, though, just to finish off here, last night we had the API, the private survey of oil, and we had a build of about 3 million barrels on crude oil, and on gasoline we had a build of about 2 million barrels. There was a draw on the distillate. So there was a build on both the gasoline and the crude last night. So let's see if the official Department of Energy numbers at 10:30 this morning confirm that. That could maybe give a little bit more extra direction. If a build is confirmed, that might put a little bit more downward pressure on the crude price. We shall see. Okay, guys, I'll leave it there. As I say, I'm going to consider it in a bit more detail, FOMC, a little bit later today. Thank you and have a great day.